Hi and welcome to EastTV. My name is Martin Smith, Head of Markets Analysis at Eastern Partners. Today I'm joined by Matt Windle to discuss Chinese Renminbi, or the redback as it's called, traditionally used as a currency and quite restricted in China. What has the growth of the currency been outside of the country?
Yeah, thanks, Martin. You're exactly right. It has been controlled and restricted in the past, but what we're seeing at the moment is a lot more importers and exporters using the currency to actually settle their trade requirements. Our recent Business FX survey from Australia and Asia showed that 56% of Hong Kong businesses are actually using the renminbi to settle off their trade. Of that represents about 17% of the total trade. It's replicated also in Singapore. What we're seeing there is 30% of Singaporean businesses are actually now using the renminbi to settle, and that's about 17% of the total trade.
What's driving some of that demand and growth in renminbi turnover?
Well, obviously the drive in demand is coming from the Chinese trade. They're one of the biggest trading partners, if not the biggest trading partner in the world. And what's happening there is that there's obviously a demand. It's a much more efficient way to do your currency exchange, to go from, say, the Aussie dollar straight to renminbi. So that's one of the key drivers. The fact that the People's Bank of China, their central bank, they're becoming a little bit more relaxed in their stance on the currency, and they're opening up. So what they want to do is they want to liberalise the currency. So that's one of the key factors as well. They've actually set up authorised clearinghouses in various countries around the world, so that's going to even emphasise it more into the future.
Excellent. And I guess looking at it from a Bretton Woods standpoint and reserve currency background, could we see the renminbi or yuan become the new reserve currency, much as the US dollar is now?
It's definitely possible. I think it's a long way off. There's still a lot of regulatory issues and hurdles that need to be overcome. They do have a variety of capital investment programs that they've set up, but they're not being fully subscribed at the moment. So that's showing that people are a little bit concerned still with the fact that it's a very, very highly regulated environment, and that's detracting them from actually moving forward at this point in time.
Excellent. Well, we look forward to, comparing some of those results against the latest round, which is coming out in the coming weeks. And we look forward to catching you for our next episode of EastTV.